history moves exponentially because of technology. So it looks like things are going like this, and they are. But even within this exponential moves, the more things change, the more they stay the same. And that's because human nature is the same, right? We as humans are the same, even though technology changes. And so human nature takes things way too far, and then we correct and we overcorrect and we take it way too far. And so then we
Yeah.
correct and we overcorrect and we take it way too far. And we kind of go back and forth like a pendulum swings.
Hey everyone, welcome to Crypto Clarity. My name is Sahil, and this is the channel where we talk all about Bitcoin and blockchain technologies. What you just saw now is a glimpse of an amazing conversation that I had with one of my favorites in the Bitcoin and macro analysis space. Mark Moss has been an inspiration since start of Crypto Clarity, and this video is a very important milestone in our journey of learning about this exponential technology. Mark talks about the technological cycles that shape our current world and how they are going to affect you. Be sure that you watch this till the end for a strategy that can be game changing for your Bitcoin journey. If you're not subscribed to Mark yet, follow the links in the description of this video and you can get in touch with him as well. Let's get right into it. Hey Mark, welcome on Crypto Clarity. Thanks for joining me. This is a dream come true. How are you today?
Yeah, I'm doing good. It's been an exciting day in the markets and exciting day with Bitcoin. So lots of fun stuff to talk about.
Exactly. I've been following all your, recent video about Bitcoin and how is it, a pension and also a retirement strategy for a lot of people. And it's amazing to see, how it can go in future and what your thoughts about it are. So it will be amazing to understand it during this, session that what is your perspective of long term thinking about Bitcoin and other strategies around the market cycle as well.
Great. Well, let's talk about it.
Okay, so I know a lot about you as a fanboy. This is, a great moment for me. But I want to let our, audience know about what you do and what have got you into, Bitcoin and this space since the start.
Okay. Well, I guess what got me into Bitcoin, we can start there. So, um, you know, I had been just an entrepreneur and investor for my entire career. And in 2008, I got pretty much wiped out when the great financial crash happened and wiped out, trillions of dollars of value globally. And it made me just kind of realize, like, shoot, I'm pretty good at business. I had a couple high value exits up to that point. Had done really well with business. Had done really well with investing. But there was this like global macroeconomic force that had this like power over my life that I didn't really understand or know much about. And so, I figured, shoot, I need to go figure out what's going on here. And so I started learning about the Fed, and I learned about fiat currency, and I learned about inflation and these types of things. And I became a gold bug. So this is, obviously 2008. I became
Yeah.
a gold bug. And I quickly kind of realized that we need sound money. It's this fiat money, this endless money debasement printing that's the problem. And so we need to go back to like a sound money. And I kind of started thinking about that. I started paying attention to the banks and kind of started to, I saw that none of the problems were fixed. As a matter of fact, the
Yeah.
problems just got worse, got bigger, and I started kind of subscribing to this theory of flag theory, if you will, which is that you wouldn't put all your money into one stock. So why would you put all your life into one country? And so instead of having your entire life susceptible to one country, why not have multiple flags or passports or access to different countries? And so why not have bank accounts in Hong Kong, Panama, Singapore? Why not have gold in vaults in the UK and Switzerland, and those types of things? And so I started going down that path. And in 2015, I started working with an attorney down in Panama to open up a offshore bank account down in Panama and start to get it on my path to getting the passport down there.
Yeah.
And I had I had seen Bitcoin come across my desk before, just like thinking about it like as an investment. And I watched like in 2013 as the price went up to like $1,000 and then crashed, and I kind of like lost interest in it at that point. But in 2015, as I was meeting with this investment banker, not investment banker, but this banker, to get the account set up, I just took another look at Bitcoin and somehow it popped back across my desk, and I just thought for a minute, what is the problem I'm trying to solve? Well, the problem I'm trying to solve is to get money out of the banking
Money.
system. And thinking that I'm going to Panama solving the problem, but it's really not because it's still in the banking system. And Bitcoin is actually a way to get money out of the banking system. So that actually solves my problem better.
Solved.
So that was sort of my first that was my first reason why I decided to buy it. It wasn't like, hey, I can buy it and get rich at this point. It was just like I'm just
Yeah.
trying to solve a problem. And it seemed a much easier way to solve a problem than it was to fly down to Panama and get this done. And so I bought Bitcoin. That's kind of my origin story. Once I started, once you put your money there, you start paying attention to it. You start
Yeah.
seeing the number go up, the
Going up then.
NGU. And then you start thinking, well, what is this thing? And I very quickly realized, again, distrust of the government and the banking system. Being a gold bug, a sound money advocate, I very quickly realized like this is the tool. Like
Yep.
gold doesn't really have a chance because it already failed and it's going to fail again. But now we actually have a tool that could actually create change. And it gave me great hope. And I figured at that point, like, I just need to start telling everybody I know about this. And so I haven't stopped talking about it ever since. And that sort of leads me to kind of where we're at today. Today, I started writing, I went down your show's Crypto Clarity. I kind of went down the crypto rabbit hole.
Yeah.
And, being a tech guy, I didn't really mention my early career started in the internet space and I had some exits in the
Yep.
internet space. So sort of being a tech guy and an investor, um, I started to think just like a lot of other people, and this was 2015, 2016, it was early days, that maybe it wasn't Bitcoin, it was blockchain that was the real
Yeah.
technology breakthrough here. And so then I started studying all the different cryptocurrencies. I wrote a cryptocurrency newsletter for 4 years, published 1,000
Yeah.
pages of research on every crypto project that was out there until I finally realized, no, it's not crypto, it's just Bitcoin. And so I've been, focused on that ever since. I write a macroeconomic investment newsletter.
Yeah.
So mainly I talk about macroeconomic things such as, again, inflation, debt levels,
Yeah.
banks, things like that, which is the why. A lot of
Why?
people might come to Bitcoin from different reasons, but for me, it's like we can talk all about Bitcoin, but we then have to answer the question like, why do we even need it? And
Need
most people
it.
can't
Yeah.
understand why we need it because they don't understand the problem. And the problem is the money is broken. And so that's what I tend to focus my time on is talking about why the money is broken, how it's getting more broken, what the
Yeah.
Fed is doing, central banks are doing, and things like that.
That's amazing because that's the reason, I talk about it from a technological perspective as well. Because on my channel, I try to bring in people from different, backgrounds and they're starting at different levels. So it's always important to understand why are you starting with it? And for you, it made perfect sense, when you were doing that, transactions for Panama, you basically would have found out that, okay, this is the perfect solution that you needed, right?
Yep, exactly.
So, what do you see right now as the best market development and why Bitcoin is part of that, revolution that we are seeing right now? A lot of people are fleeing to it. The ETF games recently, and there's a lot of development around that space. So, what are your thoughts about that and the current institutions coming around it and
My thoughts
making it
about
more
what exactly? I missed that part.
the Bitcoin market and how it is, connected to the institutions right now?
Yeah, so I mean, we're seeing a lot of institutional adoption. We've been talking about institutional adoption since 2017,
Yeah,
and that's because it's been coming since 2017. And in 5 years from now, we're going to talk about institutional adoption coming as well. And in
yeah,
15 years, we'll talk about it coming as well. And so we've been talking about pretty much since 2017 because that's when we saw the first futures, the CME futures,
yeah,
kind of got launched. But today, I mean, just today, as the time of this recording, we saw some big announcements that like the state of Wisconsin, so
yeah.
their state
Bank.
fund, which I think is the fifth largest, just announced that they have Bitcoin holdings. We see all the big banks. J.P. Morgan now owns Bitcoin. Obviously, the BlackRock and Fidelity's own Bitcoin, and so we're seeing more and more every day. We find out more and more people are on board, and I think the reason why is one, there's a lag, right? So like
Yeah,
when somebody goes and buys something, a pension fund adds that they don't go and announce that today, we don't find
yeah,
out until they do their quarterly filing. So there's like a lag there. But what happens is it's reflexivity, as George Soros calls it, and it's basically reflexive where it's sort of the market sort of builds on top of each other. When it comes to investing and building wealth, it's a pretty competitive game in Wall Street.
yeah,
And if one fund outperforms another fund because they have Bitcoin in their books, well, then the next fund has to go add it. And the next one
yeah.
has to add it and add it and add it and add it. So I
It's
think
a
that's what we're starting to
competition
see
all the time.
happen. We're seeing, more and more corporations starting to add it. We're starting to see more and more institutions, as far as like I said, like pension funds and Wall Street institutions adding it, and it's going to continue. I mean, it's slow, It's slow moving today. I mean, for those of us that are sort of in the weeds watching this, each new one that gets announced, we cheer. But like I said, in 5 years, in 10 years, we'll still be talking about institutions coming. But I think, right now, it it's a diffusion of innovation. So I mean, you're in tech, so you kind of get this. But anytime there's new technology, it follows this like bell curve called the diffusion of
Bell curve.
innovation, which is
Yep.
basically a new technology. It could be a telephone, could be a color TV. It's created by the inventor, and then
Yep.
you have what's called the true believers that really kind of they're the tech
Early
nerds and they kind
adopters.
of understand this and they come in and that usually gets the market to about 15% penetration or saturation. But then you have this chasm that has to be crossed before the early majority can come in. And so I
Mm.
think we're crossing that chasm right now. Seeing these institutions coming on board is what crosses the chasm. The chasm is where something mentally has to change
Yep.
in order for that early majority to come in, for them to think it's legitimate,
It's
right? And
legit.
so I
Yeah.
think the ETFs do that. I think seeing the institutions do that, and slowly but surely we'll see more and more come in and adopt that. And I think we'll um, fully have crossed this chasm probably in the next 5 years. The early majority will be there. And then, by the end of the decade, we'll start to see like kind of the late majority coming in. Typically, you would say about 80% adoption is like full adoption.
Yeah.
There's never 100%. Not everyone uses the internet still today, right? For
Yeah.
example. So I think we'll get there. It's just going to take some time, but it's certainly, like I said, we're cheering every step along the way.
Yeah, because we are in the weeds all the time, so we are always looking for those, little wins. But I think in the longer run, it always needs that major adoption. So, what is stopping people from coming into this space
I mean, what's stopping
and
people
taking
from
it
using the internet
seriously?
today? Right? Why
Yeah,
do some people still not use the internet? Right? I mean, like I said, we're never getting to 100%. It's just brand new. I mean, sort of kind of what I just said. So we have this diffusion of innovation, and so it just takes time. And I think right now we're kind of needing to cross the chasm, which is where something
yeah.
has to change. And so I think it just takes time, and that's what I think is stopping people.
Mhm.
It just takes time. I mean, to kind of get a frame of reference to understand this a little bit better, the internet was basically invented in the 80s.
Yep,
The first www, World Wide Web, went live in 1990. The
yep,
first purchase on the internet happened in 1994. 1995, we saw the first IPO, which was Netscape, which then brought Wall Street and all the money in. 95, 96, 97, 98, 99, 2000, we had the dot-com blow up.
yep.
All the companies went online. And here we are by the year 2000, 5 years after Wall Street brought all this business in, 20 years after the internet
Mm.
was launched, less than 10% of people had ever bought anything online. 20
Yep,
years later. It wasn't until really about 2007 that it really became common because at that point, now we had the iPhone, right? Now everybody kind of
yeah.
had that in their hand.
Infrastructure,
So,
basically.
so here we are 20 years later, and less than 10% of people had ever bought anything online. So imagine if we were here in 2000, well, I was. So in 2001, the year
Yeah,
after the dot-com crash, I started an e-commerce business. I set up a website and I wanted to sell stuff online. And it wasn't easy back then. There was no Shopify, anything like that. And I went to these companies, and I said, "Hey, I built this website. I want to sell your products on my website." And they laughed at me and they told me nobody would ever buy anything online.
yeah.
And I said, "Well, I disagree with that, and that's fine. I'm happy to give you the money and I'll pay for your products. And it's up to me if I sell it or not." And a lot of them said that we don't even want our products being sold online
Hmm.
because the dot com had this bad kind of
Bad name.
taste in
Yeah.
people's mouth because it had just crashed, et cetera. And so imagine going back to 2001, 2002, and you're asking me the question like, what's holding people back from using the internet, right?
Yeah.
So it's just technology. It just takes time, and I think most people just expect way too much too soon.
Mm.
And I think you just need to be patient. If you zoom out, in my opinion, I think it's moving pretty fast. So
Yeah.
people will come around eventually.
And compared to other technologies, obviously, this is, the fastest adopted technology, as Rahul Pal said in his one of his
Yeah.
video.
Yeah, and
That touches the
ultimately, people only take action when it fits their own self-interest. And people are very basic, just like animals. We're only motivated by two things. That's it. Humans move on two things. That's it. We move towards pleasure and we move away from pain,
pain.
the carrot and the stick, right?
Yeah.
Greed and fear. That's the only two levers. So why are more people not adopting it? Well, there's not enough fear, there's not enough pain, or there's not enough greed.
Yeah.
So, for example, one of the ways that we can look at sort of Bitcoin's growth is by measuring network effects or
Yeah.
Metcalfe's law. And
Metcalf.
so the more people that use a network, the more powerful, the more valuable that network becomes. So, for example, when mobile phones were taking off, I was a kind of an early adopter of mobile phones. I was
Yeah.
the first person that I knew that had a mobile phone, but I didn't even carry that mobile phone around with me because I had no one to call. Who was I even
Exactly.
going to call? So I just left it at
Yeah.
home. When I would go out on going, and I'd leave town, going looking at houses and stuff like that, I'd bring it with me for some business calls, but I didn't even carry because no one had it. But today, if you didn't have a mobile phone, you'd be completely left out. You
Left
have to
out.
have a mobile phone today, right? And so now the pain of not having a phone would be high. Back then it wasn't. But once
Yeah, exactly.
everybody had a phone, well, shoot, I better have one too. So the pain. Also, in the United States or in let's call it the West or the G7, the money's broken for sure, but most people don't realize that. Most people don't
Not
understand
yet. Yeah.
why the money's broken. But if you're in Lebanon or if you're in Turkey or Venezuela or Argentina, you don't have to explain to people why they need a different money. They already
Exactly.
know, which is why you see adoption of Bitcoin, like in Nigeria, for example, taking
Nigeria.
off much faster than it is in the United States. So, to answer your question, one, it just takes time for that technology to have that adoption cycle. But two, it's just because the pain isn't high enough in most of those places. But the governments are doing their best job to market it. So the more they print money, obviously, the more it debases the currency. And people in
Yeah.
the West, even on dollar-denominated currencies, are starting to see that. And two, the censorship, the rise of authoritarianism is rising so fast that people are starting to realize they need a different way. And so the governments are doing their best that they can to market Bitcoin for everybody. And eventually the
Yeah.
pain will be high enough for everybody.
Definitely. And that comes down to your, understanding of technological cycles and political cycles as well. I heard you talking about those and how they're converging right now. So what are your thoughts about that? And, all this comes in together.
Yeah, so everything in life sort of has these cycles, just these seasons, if you will, right? So every year
Yeah.
we have four different seasons: summer, spring, winter, fall, kind of a thing. And when it comes to history, what we can see is that history moves exponentially because of technology. So it looks like things are going like this, and they are. But even within this exponential moves, the more things change, the more they stay the same. And that's because human nature is the same, right? We as humans are the same, even though technology changes. And so human nature takes things way too far. And then we correct and
Behavior.
we overcorrect and we take it way too far. And so then we
Yeah.
correct and we overcorrect and we take it way too far. And we kind of go back and forth like a pendulum swings. And
Yeah.
so you can see that throughout history, we can see these cycles, and these are these periods where things seem to repeat. And so even though technology changes, the world changes. 300 years ago, basically, the whole world was in just dirt.
Yeah.
Today, we obviously have spaceships, so the world's changed, but like human nature is still sort of the same.
Still the
And so
same.
that's sort of these cycles that repeat. When there's all types of cycles, there's 4-year cycles like these election year cycles that we're in
Yeah.
right now, an election year. There's credit cycles, business cycles, there's 10-year cycles. I mainly look at 80-year cycles. So there's a popular book written called The Fourth Turning, which talks about
Fourth
these
turning.
80-year cycles. And within an 80-year cycle, they talk about there's 4 20-year cycles. So, like I said, you can break these things down.
Yeah.
And so in a fourth turning, there's 80 years. So I typically, most of my research has just kind of been focused on these 80-year cycles. Really, I call it an 84-year cycle. And that's a populist uprising or like a regime change cycle. So about 80 years ago, we saw the end of World War II,
Yep.
which was like, Hitler, World War II. In the United States, we had FDR's New Deal, which sort of changed the U.S. into sort of this socialist nation.
Yeah.
About 80 years before that, we had Karl Marx wrote the Communist Manifesto, which led to the largest European revolution in European history. And then when you look at cycles, when you look at cycles, if you look at like technical analysis on charts, you'll see whenever
Yeah.
they have like a triple top or triple bottom, that's typically like a really strong cycle to move from there. And so then Three times 84 equals 252. And every 250 years, we have like the big cycle. And the big cycle is really the pendulum swinging from centralization to decentralization. And so right now, it seems pretty evident if you're paying attention that we're sort of at this peak centralization. So we have the World Economic Forum trying to set like kind of global policy, and we have the BIS, Bank of International Settlements, and the IMF, and the U.S. global homogeny and things
All
like that. But at the same time, we can see how that's being rejected, how that's breaking apart, right? So right now, literally in front of our eyes, we're seeing the rise of the BRICS, and we're seeing China and Russia rising up, and countries are rejecting this U.S. homogeny, things like
yeah.
that. So we're seeing obviously a lot of pushback against the World Economic Forum and things like that. We're seeing the BIS and the IMF starting to lose their power in this. So we're seeing that we're peak centralization, but it's also falling apart at the same time. 250 years before
Yeah.
was the American Revolution, the French Revolution, right? So the American Revolution
Same time.
rejected the centralization of the monarchy and set up a decentralized government. The United States is a republic, right? 50 independent states.
Yeah.
250 years before that was the Protestant Reformation, which at the time the church and the state basically had all the power and the control, one central institution, one centralized path to God. And that was rejected. And so we can see that sort of repeating every 250 years, and sort of that's where we're at. So that's cycle number one.
Hmm.
On a 50-year time frame, about every 50 years, we have a technological revolution that happens. We've had five, I believe, that Bitcoin, but really decentralization is the sixth wave.
Yeah.
And so that's kind of where we're at right now. And so obviously, Bitcoin is helping to power that decentralized wave. It's decentralized technology. It's given us a new protocol that we can build new decentralized platforms on top of. And we're starting to see other decentralized protocols like Nostr, for example, picking up. And I think in one way, AI is sort of centralizing in a way, because like OpenAI fed the AI, but at the same time, it's also very decentralizing, because now I could have a small business that could do the work of 10 people.
Yeah.
So instead of me having to work in a big company, I can be a small company. So it's also sort of decentralizing as well. And I think Bitcoin, in combination with these other things like AI, for example, will just lead to more decentralization. So that's the second cycle, and the third cycle is the financial cycle, which happens on an 80-year cycle, and about every
Hmm.
80 years we see the financial system reset, and that's partly to do with, again, just taking things too far, but also partly to do with just the way the credit cycle works. Ray Dalio
Yeah.
has done a lot of work on that
Policies.
80-year cycle. And we can see about 80 years ago, the whole global financial system was reset under what's called the Bretton Woods Agreement.
Bretton Woods.
Um, and right now, the IMF is calling for a Bretton Woods 2. Really, it's probably a Bretton Woods 3 that we need. But so we have all three of these factors: a financial revolution cycle, a technology revolution cycle, and a political revolution cycle, all three converging right now, which, from my view, sort of leads to why this world is so crazy right now. Right? There's a
Exactly.
lot of changes happening in almost every area right now that leads to a lot of uncertainty, a lot of instability. A lot of
Hmm.
changes are going on.
And definitely that's going to bring out, a lot of good side of the people and a lot of bad side of the people as well. So, because people are rejecting the idea of a lot of things here, and, there are things that people don't agree with, but they have to comply with. But, it's about time that, people are changing that and slowly adopting systems like Bitcoin, obviously, which will make it more decentralized and easier for them to move in future, right?
Yeah, yeah, exactly. So yeah, technology will really change that, right? It's always technology that changes the world, because it changes the way that we communicate and we organize, and things like that. And so right now we have these technologies, which is why it's important to understand this technological revolution happening at the same time as the political revolution cycle.
Yeah.
And to the point that I just made about AI being sort of decentralizing. So all the government structures that we have today were designed for a world of about 100 years ago. But we no longer live in that world
Not
anymore.
longer
We no
there.
longer
Yeah.
have these giant corporations with thousands of people working there in mass
Industries.
manufacturing. And so now we have people that work from a laptop anywhere in the world,
Yep.
a single person. And they work with other people that are single person businesses all over the world: coders, programmers, designers, etc. And so,
Yeah.
that is a very decentralizing nature. It breaks down government's ability to what we call it breaks down their what we call return on violence, right? So the governments have monopoly on violence. And so as long as you're inside their border, they can kind of squeeze you.
Squeeze.
The returns are high, meaning they get a high return on the amount of violence they can inflict. But
Yeah,
now that we can move around with laptops, we can be anywhere we want. There's really no one to squeeze, and it makes the returns very low for them. And so that's a big destabilizing force. Now we can see the governments are resisting that. They're trying with everything they can to try to hang on to that power. But at the end of the
yeah.
day, it's going to be as futile as the government's trying to hang on to the church and state in the 1500s.
Exactly. And definitely people are understanding that, and even, physically locating themselves in a different place if it's not, related to their ideology. I've seen people moving to Dubai, Singapore. A lot of these places are like startup hubs now, and, having a lot of activity there. So that's good to see that people are basically seeing that kind of ideation, and they're not, stuck to their physical location.
Yep.
On Yeah, on that, I would, also want to talk about the uh, strategy that you were talking about Bitcoin as a pension strategy. And I looked at that video, and it made perfect sense to me. But what would you say to people who don't have, that kind of thinking about Bitcoin for long term?
Well, I mean, ultimately, what would I say about that? Ultimately, most people have no idea how the financial system works. They have no idea what money is, and they have no idea the game that we're playing.
Yep.
And so whether you want to or not, we're all forced to play a game of money because without money, we can't buy food, we can't have a house, and we
Yeah.
basically die. And they misunderstand what money is. They misunderstand, like I said, the entire monetary system. Henry Ford, the father of the automobile 100 years ago, said that if the American people knew how the banking system worked, there'd be a revolution before the morning. And so we've been kept in the dark about this. And so um, what most people don't understand, and this is most people, we've been taught that you should go to school, you should get good grades, you should save up for a retirement, and hopefully one day you'll have enough money saved up that you could retire and you could live off of your savings, and hopefully those savings last before you die.
Yeah.
Now, we know this is what everyone's been told, and we know it doesn't work. So in 2008, for example, back to the great financial crash, millions and millions of Americans and people around the world had to go back to work. They were retired. The money they had saved up in their retirements, it dropped by 65%. They no longer had enough money and they had to go back to
Yeah.
work. So we know it doesn't work from three different ways. One,
Yeah.
half of baby boomers, half of people going into retirement today have no savings, half of them. So that didn't
Yeah.
work. Number two, the math doesn't work. To think that you could save 10% of your income for 30 or 40 years and then
Yeah.
retire on 100% of your income for another 20 or 30 years, like how does that math even work? So that
Yeah.
doesn't. And then number three, ultimately, we don't want to live off of savings, right? So the game of building wealth, which is certainly not our highest calling in life, but in the game of building wealth,
Yeah.
wealth is not money. It's not cash. It's not dollars. Wealth is goods and services. So the goal is to get more goods and services, not less. The goal is to take
Yep.
fiat currency and turn it into assets, not turn assets into currency. And so the goal is for me to add more and more assets, and then for those assets to pass to my kids, and then my kids
Yeah.
continue to build those assets that pass to their kids, and on and on. That's how generational wealth is built, but nobody's been taught that. So what most people think is, let me build up enough savings and hopefully I can spend it all before I die, and then I die broke, and then my kids get nothing. And so it's a complete mental shift. So the goal is to get assets. Now, then the next question would be, well, what assets should I get?
Yeah. What is
And then
performing?
and then on top of that, how can I get assets that pay me so I don't have to sell them? Because the goal is to get more assets. And so you mentioned a video that you watched, and I talked about how you could do this on Bitcoin. Now, you could do this on any asset,
Yeah.
so you can fill in the blank. But on Bitcoin, I was referencing a true story. I was talking to my friend's dad at the gym, and he was telling me how he has enough money if things go right for him to live the rest of his life, and then he'll die broke. And I just said, look, man, like you could just take that hypothetical, let's call it $1 million, go buy $1 million worth of cash flow real estate that could pay you the money you need to live every single day.
Yeah.
And then when you die, you still have the same amount of money in
Asset.
real estate, but even better, your kids get that and they get the cash flow that you're getting now. So instead of
True.
spending down your savings, you put it into assets that deploy capital. So like real estate, businesses,
Business.
dividend
Yeah.
paying stocks. There's any number of places that you can do that. Now, specifically, how do you do that against Bitcoin? Now, what a lot of people think, because they think about, they don't really understand all of this, the game, if you will. They
Yeah.
think that either one, I'll save up enough Bitcoin so that when I'm ready to retire, I can sell a little bit
So,
every year and that I can just sell a little bit. And that's the old way of thinking, that I save up and then I live off my savings and hopefully that lasts me out. So that's the wrong way of thinking. Another way that people think about it is what I should do is put my Bitcoin up and earn a yield on it.
yeah.
So if I give
Staking.
it to a company, they'll pay me 6%, they'll pay me 8% for that. But that's also broken. The reason why that's broken is because as investors, we're looking for asymmetric opportunities. So what we need is asymmetric means that there's more upside than there is downside.
Upside.
I want something that has a 10 to 1 odds. I want to invest $100 to make $1,000.
Yep.
I don't want to invest 1,000 to make 100. And so what happens is when you're thinking about earning yield on your Bitcoin, you're thinking about it the wrong way. I'm going to risk 100% of my Bitcoin to make 6%. Why would I
Yeah.
ever do that? And so with Bitcoin, because Bitcoin is the most digitally scarce asset in the world, it's been the best performing asset in the world. The number go up, the NGU is the yield. That is the yield. It's built in. And
Exactly.
so, and so the yield is already there. It's already going up by that amount. Now I could sell it, like I said, but the problem with that is one, hopefully it lasts and I don't dwindle it down, but then my kids don't get it. Two, I have to pay tax on all that money. So what I broke down as a strategy is instead of doing either of those things, you can just borrow against the Bitcoin. And we don't know what the future holds, but based off of any number of assumptions, it looks like you could put some money in, wait about 5 years, and then pull about 10%, borrow about 10% of your stack every single year in
Yep.
perpetuity. I mapped it out about 20 years. I can't
Yeah.
say 1,000 years, but you can just borrow a little bit each year, which then is tax-free income because it's not
Yeah.
income, it's debt. And I keep the Bitcoin for capital appreciation. So that's sort of the premise of that breakdown.
And definitely people who want to know about that, I'll link the video in the description so that you can go there. And even there is a sheet that you can use, the Excel sheet that Mark created. So that would be useful for anyone who is, requiring that.
Yeah, and on my website, just onemarkmoss.com, number one markmoss.com, I have a link to actually an ebook that I wrote that breaks this way down in more detail than the
Yeah.
video. It talks about the entire game and how people have it all wrong. So if you want to get the ebook and you want to get the calculator, it's all free. You can just download it for free on my website, or just watch the video. But like I said, the video is more
Yeah.
of about the specific strategy, but doesn't really
Yeah.
break down the entire role of the game. But yeah.
Exactly, but it's amazing to see, the value that it has in future because I've talked to people in Australia already who are providing Bitcoin loans, and they are, doing good in this space because obviously this is an asset now, and it has so much value in the last, obviously, since its inception, and we have seen how people, would have used it if they could take loans against it, and that would be a great strategy for future. And that's what my thinking about it as well, that for long term I want to keep stacking those sats, and again have that for retirement instead of other things like real estate. I cannot get into the market right now because as a young person it's really hard, and a barrier to entry is really high at the starting.
Yeah, so Bitcoin is a really good tool for people who don't have a lot of money because it's digital property. And so the reason why the rich get richer is because the rich own assets and
As
the poor
such.
don't own assets. But the problem is, in order to get into the asset game, it takes a lot of money. And
Yeah.
so that's why as prices continue to go higher, the rich fall further behind because they can't get in. So to your point, to get a house takes a lot of money.
Yeah.
And I mean, even to buy a share of stock could cost a
Yeah.
lot of money, right?
Exactly.
If you're in a third world country living on $5 a day, even trying to get one share of stock could be too expensive. But anybody could
Yeah.
buy $1 worth of Bitcoin. And so it really
Exactly.
democratizes access to digital property, if you think about it that way. And so it's like buying a house or buying a share of stock or buying a bar of gold, but you can buy it in small quantities, which you can buy gold in small quantities as well. But it really gives everybody a chance to get in, regardless of sort of their income or savings level.
Exactly. And that's what happened in Nigeria as well recently when their currency was crashing and people had that option of Bitcoin and they were able to get into that, right?
Yep.
And a lot of countries like that as well. They have that issues with their fiat currencies, and people are finding ways to get into Bitcoin and other assets like that.
Yeah, I mean, we talked about that earlier, right? So, like in the West, I mean, people don't understand the problem with their money, but in other countries like Argentina, Venezuela, Peru, Lebanon, et cetera, like they know they have to get out of their currency as fast as they can, and so they're looking for any type of exit, and Bitcoin is a pretty good exit for most of them.
Yep, okay, that's amazing. And another question that I wanted to get your thoughts about was, how countries are adopting it, especially countries like El Salvador, and what is the effect that we will see for them? I've heard from people that it will be one of the richest country because they have Bitcoin and balance sheet. So, what are your thoughts on that?
Well, we do know that game theory is that you sort of have that first mover advantage, right? So El
Yeah,
Salvador was able to buy a lot of Bitcoin at a lower price than it is today. So if another country wanted to buy Bitcoin and hypothetically they had the same amount of money, they get half as much Bitcoin.
yeah,
However, as far as will they be the richest country, I don't know if that's the case because
yeah,
they're one of the poorest countries today, and so they couldn't buy that much of Bitcoin, right? So
okay,
hypothetically, even if a more developed nation, Saudi Arabia, Qatar, um, obviously the U.S., et cetera, even if they were to buy 2 or 3 years from now, when Bitcoin is four times the dollar amount of what El Salvador paid, they could easily buy 10 times more,
more capital for
right?
them. Yeah,
So, I don't know if they're going to be one of the richest countries. There's a lot of factors that go into that. But what it is kind of going back to, I think, maybe your first question, which is about institutions getting in. And I mentioned like reflexivity. And
mm,
Wall Street is competitive, and so is nation building. And so, if a
yeah,
nation adds Bitcoin to its balance sheet, an institution does, and it does better, then other institutions are sort of forced to adopt that.
true.
And sort of the same will be true with nation states as well. And so right now you see small nations like El Salvador starting to add it. Some of the last nations to move will probably be ones that are on the euro and the dollar because they sort of have the most to lose, right? So nations who have no currency of their own, well, shoot, I
Yeah,
guess let's just use that, right? Um, but the bigger nations, I think, will be the last to move on that because they have the most to lose. But game theory eventually, will kick in, and as we say, sort of in Bitcoin, is that everybody will eventually buy at the price that they deserve and everybody will eventually
exactly.
come over. Yeah.
Now that's the saying that every Bitcoiner and people in that space understand. And amazing to, have this conversation with you, Mark. I will give back you your time and, understand that you have a busy day and took out some time for me to get into this. And that's amazing. I'm happy to have you on here.
Yeah, great. Well, thanks for having me. It was fun.
Thank you.